It is time to ignite those dreams of our young people and empower the youth to bring their visions to life. Now, we are partnering with the After School Graduate Development Center on the Ignite Enterprise project to provide practical tools to teach young people how to build businesses and to create employment for others. In Lagos, the possibilities are endless. Èkó ò ní bàjẹ́ o.
Lagos State, in partnership with AGDC, presents Ignite, powered by First Bank and supported by Bank of Industry.
At the beginning of a business, many entrepreneurs get caught up in the excitement of unleashing their ideas and becoming their own boss. But many also fail to keep proper track of their finances. This ultimately leads to confusion and frustration when sales seem to be high, but there never seems to be enough money to pay bills and carry out necessary transactions. Today's session will tackle accounting, bookkeeping, and managing your all-important cash flow, which is the most important thing in any business. My name is Ibukun Awoshika, and I welcome you to Ignite.
Ignite, from dreams to reality. Sit back and relax for an exciting show today as we're taking through life-changing lessons in the world of business. Ignite, from dreams to reality.
We've said a lot through the program about keeping your records, about keeping your books, about your financial information and the importance of it. And I realize that a lot of you don't have the technical skills to be able to keep your own accounts properly. You also probably cannot afford an accountant at this stage. But there are certain information that are simple, straightforward, easy for you to keep that will help to save your business in many ways. Apart from helping you to be able to determine if you're profitable, it would help you with tax issues. It would also help you with presenting your records for possible customers where it is necessary. Now, I've asked Mr. Shola Ojedokun, who is the Group Finance Manager at the Chair Center Group, to come in and share with you. He's going to be teaching you about keeping your financial records, your accounting, and all the necessary information for your business to be effective and to grow. Let's welcome Mr. Shola Ojedokun.
An accountant, as they used to say, are boring people. Accountants, they go through processes, they set businesses, they give you a lot of issues. They'll tell you, you have to follow this process, you have to sign this, you have to sign that. And then people see that's a bottleneck. But all is for our own purpose. Now, basically, when you're starting a business, an accountant is just like a custodian of information. They help you manage information. They help you organize the information in a way that is suitable, either for you to know how healthy your business is, either for tax purpose, either for investment purpose. Because if you're going to present to investors or would-be partners, you need information. And you need to arrange information in a way that it will show your track record of how your company is growing, is going through a definitive moment, it's going down, it's going up. And one beautiful thing about account now is, then it used to be about figures alone. But now, account has grown beyond figures alone. It has become quantitative. Now, behind every figure, there's always a history. There's always something to talk about behind every figure. Now, back then, when you present information, they'll tell you, and basic things, the tax people, the investor will always look at is your cash flow. They want to look at your financial statement. And what comprises in your financial statement are basically your income statement. That's what you call your profit and loss. You are looking at your trial balance. You are looking at your balance sheet. Now, your income statement simply says everything about your business, whether you are making a profit or you are making a loss. Your trial balance shows is a summary of all that you do in the business. That means it shows everything. And the balance sheet, it shows whether all your assets, your investments, and everything that is to do with your business. Now, when you're starting a business, how many of you has a business plan or feasibility study? Because I know that is one area, just say, I don't need a feasibility study, I'm just going to run a shop. And all I need to do is just to start off with a capital. You don't look at the risk, you don't look at so many things. And you would agree with me that cash flow is a major component in a business plan. Now, you hear accountant talking about financial analysis, cash flow analysis. I'm here to help you demystify what we call all this big grammar accountant, all this. When you talk about cash flow analysis, all it basically is talking about, in a very simple term, is about where are you going to get money to put into the business? How are you going to spend the money? What are you going to spend the money on? And what is your plan? When you say cash flow, is it coming in? Is it going out? Those are basic, simple things. And your cash flow, we have a projection for a year. You can narrow it down to monthly, biannual, which is every 6 months. You can narrow it down to monthly, and you can do it on a weekly basis. Now, your cash flow, which is like the lifeline of your business. When you're opening a business, what are the necessary documents you consider? Now, for a small business, even for big businesses, you need a petty cash voucher. Now, when you're talking about petty cash voucher, it's just a document to show that how you spend your money on a daily basis. I want to take transport. I want to pay for fuel. Whatever you're going to do on a daily basis, your petty cash, and there will be an analysis at the end of each day or each month, that if you spend money on fuel, it will be classified under fuel. If it's on transport, it will be classified under transport. Then those are the records when you're talking about tax people, about the tax authorities. Those are the documents they look at. When you look about what creates your track record, your cash flow, that accumulates into your cash flow, is your petty cash. Now, you also need a check payment voucher. Now, the essence of check payment voucher is when you withdraw money from your bank, when you open an account, and your company is duly registered, and you open a bank account. Now, basically, it's usually very good to be disciplined. And the only way to be disciplined is that when you receive any money from anybody, always try, even if you're going to spend out of it, always pay it into your bank. Now, so that you can have a track record. Now, if you go and get a contract for, like, say, 10 or 20 million, and they pay you in cash, and you don't route it through the bank, what do you show your likelihood investors? How do you show a track record of how your business has been doing? How do you show a track record of your performance over a period of time? Always ensure that whatever money you collect, whatever check you collect, you are able to pay it into your bank. Now, when I'm talking about check payment voucher, what it simply represents is when you are withdrawing money from your bank, you fill your check. And when you fill your check, in your check stub, you write what it's meant for. Now, there is supposed to be a voucher that will state what you are using the money for, like a withdrawal from your bank. It shows you that you have a record of what is leaving your account. Because at the end of the month, you will do a bank reconciliation. Now, by the time, for every withdrawal you've made from the bank, you are able to write it and attach it and keep those documents. Even if you're not an accountant and you cannot afford one for now, if you talk to a family member and say, like an accountant, and you say, look, I want you to help me prepare my account, they need necessary documents, the petty cash voucher. Those are the questions. Those they say, how do you run your business on a daily basis? They need your petty cash voucher, because that petty cash voucher, the way it works is you withdraw money from bank, say I want to have a float of 50,000 to run my business on a daily basis. When you withdraw that certain amount of money, 50,000, and if you want to get money, if you want to pay for transport or pay for any of your running cost of your business, you fill it in the petty cash voucher and you file it away. Now, that means if you spend 500 naira now, that means your petty cash has depleted to 49,500 naira until you spend the whole amount. Then you replenish from your bank again. That means there's a track record of how you injected capital into your business, which is in the bank. Your check payment voucher, you wrote a check, and the money leaves your bank. You fill a check payment voucher, showing an evidence that you withdrew this money for your interest in the office, which you can also call your petty cash. You also call it interest. It enters your petty cash, and from your petty cash, it goes into transport. It goes into fuel. It goes into telephone calls. At the end of the day, you're able to track everything about your business from the bank. If the tax people are going to come, they will ask for your statement, your bank statement. And they will check this money that left your bank statement, where did it go? You can track it to your petty cash. You can track it to every documentation. Now, for people who do business of products, you also need an invoice. On the invoice, you also need to state, when you're printing the invoice, you need to state your VAT number. Those are very, very important for you to serve as a collecting agent for the tax officials. Because if you're going to charge any of your customer VAT, which is 5%, you need to have a VAT number. If you need to do a withholding tax, you also need to have a tax registration number. You know, I understand when you were being told about tax identification number and all the VAT and every other thing. Everything is meant to be quoted on your invoice. And now the invoice shows you, basically what it will show you is the amount you are selling your product. The amount you're selling your product, the agreement. It's just to show a track record. If you have an inventory of, say, like 100 phones which you sell, and you want to sell to anybody, always ensure that every sale is written on an invoice and it is duly filed, because those are part of the documents an accountant will work with. If you don't give an accountant any document to work with, then there's nothing for them to prepare. It will be fictitious. Accountants are not magicians.
Ignite, from dreams to reality.